The data speaks, analyzing Bitcoin Lightning Network, Bitcoin Cash, and Litecoin. The cryptocurrency world is full of surprises, constantly evolving and presenting new challenges and opportunities. As we discussed previously, we'll analyze all data available for BCH, LTC, and LN to gain insight into how permissionless global, decentralized money will likely scale to an unlimited number of people. So how do these solutions compare in terms of data? What statistics reveal their effectiveness and adoption rates? The answer lies in understanding the unique data and technical aspects of these cryptocurrencies. Let's dive in and explore these differences in more detail. This exploration delves into the data behind their growth, examining transaction counts, transaction distribution for each chain, and future growth prospects. We'll examine their technical advantages, user adoption, and potential future in the evolving landscape of digital currencies. How have these solutions managed to carve out their niches? The Bitcoin Lightning Network, the most popular proposed scaling solution, has underwhelmed almost everyone. Bitcoin Cash has also been very underwhelming, but Litecoin has surprised many, by far outpacing the others in terms of growth. The first data point we'll reference is Bitrefill. Bitrefill is the largest commerce platform by volume globally, so their data is reflective of broader market trends. Here's the relative payment chart when shown by monthly active users, so this filters out average size of transactions and just looks at number of total transactions. This is the breakdown by specific payment methods for each cryptocurrency since March of 2023. What is important to note for growth in cryptocurrency payment methods is that typically, as price increases for the underlying cryptocurrency, so does the incentive for holders of that specific coin to spend them. The outlier here is Litecoin's usage. It has grown dramatically despite the price of the coin not increasing over the last 2 years. Our interpretation of this data is that Litecoin growth since March of 2023 has been due to relatively high fees on the Bitcoin network. In other words, Litecoin adoption is growing through an organic need or non-speculative use, while most of the others only see relative volume increases during bull markets. This is significant. Why? This chart shows that Litecoin has grown both in absolute and proportional numbers. This is what we'd expect as Litecoin begins to be monetized at higher value ranges as Bitcoin prices out higher value transactions. Litecoin has a much easier growth path than other cryptocurrencies because there is already an established market for Bitcoin such that Litecoin can absorb Bitcoin's market share as users are increasingly priced out. This is our core speculative thesis around Litecoin growth potential in the future. We're not betting on a new use case or some untested marketplace. We're betting on trend continuation. Now let's dive into the largest US merchant processor, BitPay's stats. As you can see, Litecoin exceeds Bitcoin in total number of transactions and has for this entire year. What's significant about this graph is that we can conclude that once BTC users migrate to LTC, they tend to stay around even after BTC fee levels decline. These network effects are sticky. Now take a look at average value statistics by payment method. Bitcoin far outpaces Litecoin with an average value transacted around $1,200. This is important to understand as a speculator in this market. Many people believe that Litecoin is underpriced solely based on the number of transactions it's processing in relation to Bitcoin, but this is only half of the story. A network should be priced relative to its number of transactions multiplied by the average size of transactions. This would give you a total dollar amount sent over the network per unit of time. So, at current average transaction value rates on BitPay, Litecoin would need to increase its average transaction value by about 10 times such that its total transaction volume would be equal. And what is likely the catalyst for this to occur? As analyzed previously, the Bitcoin fee level would need to reach a level whereby those $1,000 transactions are forced elsewhere. People likely will not pay over 10% for transaction fees, so a fee level sustained above $100 would do the trick. Let's take a look at Bitcoin's broader transaction distribution. Where are most Bitcoin transactions taking place in terms of value range? Where do most economic transactions on Bitcoin live? As we've seen previously from BitPay, the average value transacted with Bitcoin is around $1,200. If we look at BitInfo charts for data, we see the average value showing that it's around $30,000. But We need to filter out the very low-value transactions from things like runes and ordinals, and also filter the extremely high multi-billion-dollar speculative transactions between exchanges that distort these numbers. We want to get a sense as to where this primary real economic value range lies. Looking to median transaction values is a good start. Generally, they've hovered between $200, $1,000. Ignore the trend since 2023, as that's been driven by minimum transaction amounts for ordinals and runes inscriptions. It's reasonable to conclude that the vast majority of Bitcoin's real economic value is being transacted from $1,000 to $10,000. Now, if fees are to rise high enough to price out these users, what is likely to occur? Based on history, most transactions priced out of BTC will be captured by LTC. For macroeconomic and technical analysis reasons, we believe that fee levels will increase dramatically higher than ever before in history. This means that this historical substitution to LTC will happen on a much larger scale. Once Bitcoin price breaks key levels, broad awareness typically comes to crypto. The $100,000 level is a huge psychological level, as it represents a six-figure price. This will be televised globally, which likely results in a typical cryptomania as seen in 2013 and 2017, except this time we'll have at least an order of magnitude more people trying to transact with Bitcoin, such that it will result in a traditional economic shortage for BTC block space. We need to try and conceptualize what will happen if there's a sudden rush to transact on-chain, analyze the data behind how many Bitcoin adopters for both speculative and economic reasons there are, and estimate the number of people that will be competing for block space at the same time. From Techopedia, there are an estimated 172 million economically relevant Bitcoin addresses, with 25 million of those belonging to private individuals storing them in cold wallets. Based on our anecdotal experience, Form being involved in the space, we are anticipating that the vast majority of private Bitcoin owners will attempt to move at least a small percentage of those coins if price breaks the $100,000 level. There were many individuals waiting for that price in the 2021 bull market cycle, and it never arrived. So if Bitcoin is to move parabolically, as it's done historically, and the macroeconomic conditions suggest that this is likely, then we'll also need to account for a larger, more broad audience globally looking to buy Bitcoin. So not only do we have the 25 million people potentially trying to transact on Bitcoin, but also there will be coins moving between exchanges for arbitrage purposes, new technology for minting meme tokens via ordinals and runes, and there should likely be a multiples increase in number of Bitcoin speculators total. We'll assume that adds up to potentially 100 million or more people trying to use the Bitcoin chain at the same time. If you imagine that scenario, you understand what we mean by a traditional economic shortage of block space. Sky-high demand into very limited block space capable of processing 500,000 transactions per day. The highest bidders will be prioritized as miners maximize their rewards by including the highest fee-paying transactions into the next block. What we're implying is that fees can go from $100 to the thousands very rapidly under the right conditions. The history of Bitcoin fees shows an anomaly for this cycle as well. Never have fees increased to the levels they've increased to this cycle before all-time highs were broken. And look at Google search interest. It's non-existent. We anticipate breaking the 2017 highs in terms of broader interest. We've already shown that historically high Bitcoin fees lead to a surge in network activity, but we need to think bigger, much, much bigger. What we're talking about with an expected vertical rise in fees is the vast majority of economic activity being priced out of Bitcoin. This won't just lead to an increase in total transactions for Litecoin, but a dramatic increase in the average size of those transactions. Let's look at adjusted NVT ratios for both of these based on today's network statistics. A quick explainer on NVT ratios. It stands for network value to transaction ratio. It is like a price earnings multiple for stocks, but applied to blockchain. It is the ratio between total network volume versus market cap of the blockchain. Now look at the trend in NVT numbers for Bitcoin. Why has this occurred? Well, based on our understanding, the rise in NVT ratio suggests a large speculative premium to own Bitcoin relative to the transaction volume happening on the chain. The likely reason for this is that Bitcoin salesmen have created a narrative of endless growth, a narrative that says every other cryptocurrency will lose to Bitcoin's network effect. But the data we just looked at actually shows the opposite. So Bitcoin is priced for perfection today based on its highest ever NVT ratios. Litecoin's NVT ratio has been declining as seen in this image. This shows a relative undervaluation. What's important to note about Litecoin's declining NVT is that this is happening while price is not increasing. This is a historical anomaly, just like the transaction stats from BitPay and Bitrefill shown earlier, which we believe represents real economic growth of the chain into declining speculative interest. Litecoin is priced around 10, undervalued relative to Bitcoin based on this statistic today. This is not taking into account our future expected scenario of skyrocketing fee levels in which Bitcoin will lose most of its economic market share. But why has Litecoin price been able to be suppressed to historically low NVT ratios when most of the transaction activity is not speculative? Litecoin has had to absorb a large amount of selling pressure from miners and speculators who have given up on the project to chase meme coins and various other altcoins. As you can see from this chart, Litecoin miners' reserves have dropped by 85%, or over 10 million coins. Nearly all mining pools have completely gotten rid of their Litecoin holdings. The Litecoin block reward has also halved twice during its 7-year consolidation range, which amount to 21 million Litecoin. This amounts to a total exceeding 31 million coins being distributed from weak hands to stronger long-term holders or users of the network. We believe this represents a building supply constriction. The tightening compressed volatility should result in a near vertical explosion to the upside if Bitcoin fee levels do go to the levels we anticipate. We anticipate a narrative shift that will happen in a dramatic fashion as this plays out. People will realize what we have known since 2017, that Bitcoin has a monetization limit like all other market-based monies and commodities. How so, you ask? While there are similarities between gold and Bitcoin, the analogy falls short. While it's evident that as gold price rises, so does the incentive to mine more supply, which inevitably results in a supply-side correction and subsequent price stabilization at higher levels, Bitcoin actually has the same exact property. Unlike gold, no matter how many people attempt to mine Bitcoin, it has a difficulty adjustment algorithm that caps the block reward such that you don't get more supply. But Bitcoin is different from gold in that as more people adopt the network, so does the cost of using it. As we've pointed out in previous videos, the proposed scaling solutions do not stop this from happening. This is a demand-side correction effectively stabilizing its price over the long term. You see, Bitcoin can keep increasing its average transaction size, but eventually runs into a hard wall where any increase in higher value transactions results in a proportional loss of transactions at the lower value range. Think about it, there are far more lower value and mid-value transactions than high-value transactions in an economy. This should make perfect sense to everyone. What we're anticipating is for Bitcoin price to reach that limit in a global mania within the Bitcoin speculative market. What does that mean for Litecoin? If the correlation between Bitcoin fee level and Litecoin network activity hold, we will see these two networks converge in terms of total value settle on each chain. As this happens, the narrative around Bitcoin should change. The market will no longer price Bitcoin at a 10x premium based on NVT ratios to LTC. And given the expected increase in LTC network activity, there is no circumstance in which a relative pricing does not occur. Speculators chase growth, and the upside potential is so large in LTC under these conditions that we'll see people pile into Litecoin upon this realization. So you should be able to now see how Litecoin will no longer be overshadowed by his older brother. Litecoin is Bitcoin. In our next video, we'll analyze the price charts to show you when you should expect this to start taking place.